What is going on, my friends, and welcome back to another video on the channel. Well, in today's video, we're going over Solana as we are starting to see some nice price action with a move of about 6% today. And of course, towards the end of the video, I will talk about, the Solana hack that we saw last week and how it has possibly affected my view on Solana as a whole. So definitely stick around to the end because I think that will be important. But with that said, of course, let's start off with some technical analysis. So, looking at Solana, we've been having a pretty good day today, right? We're up to about $42.84. Bitcoin has made a strong move up towards $24 to possibly retest its own resistance. And so for that reason, things are looking okay, at least for the day. Now, I will say that I am not still that excited about what we are seeing from Solana, but this is pretty interesting to see that we're getting a fourth bounce off of this bottom level of support. Now, one reason I say that is because what I've noticed historically is that Solana is kind of like a three bounce type of thing, right? The third bounce, either on resistance or on support, is always important, right? And so what we can see here is that we've put in 1, we've put in 2, and we put in 3. And knowing that 3 bounces is usually important, when we saw this failure here, I was like, oh, this might definitely be the moment where we start to roll. But of course, with the market moving forward, with Bitcoin using its 200-week moving average as support, we have seen a little bit of growth from here. Now, going forward, I want to let you guys know at what given point would I start to get more bullish on Solana and when would I start to look to actually buy Solana. So let's kind of zoom out to the macro and let's see exactly what's going on in a more zoomed out perspective. So, looking at this thing, we are still within this ascending wedge. Now, one thing we know about ascending wedges is that more often than not, they will break to the downside. Now, I'm not saying that they will always break to the downside, but these bear market rallies are extremely common and they will usually have moments like this where we go down, we put in this, ascending wedge just to kind of get some people over bullish. They start going long, we liquidate some of these shorts, and then we start to capitulate to the downside, right? It is what usually happens, right? Now, again, if inflation numbers come in Thursday or Wednesday, I don't remember the exact day, that they're doing really well, right? Inflation's starting to come down. Everyone starts to get a little bit optimistic. Of course, then we could possibly see this market moving forward without the need to capitulate, right? But considering the fact that more often than not, we will see this break to the downside, I'm not doing any major accumulation while we are within this ascending wedge. Now, there's a couple ways to play this, right? There are trades to be made while we are within this wedge. Obviously, if you would have bought right here and say even just sold like right here, somewhere near the top, you could have very possibly seen some growth of well up to, let's call this 40%, right? So I'm not saying there aren't trades to be made in this wedge, but going into mass accumulation within this wedge simply just is not a good idea, in my opinion, at least. Now, if you're wanting to do some trades from this point forward, I would be looking for a few things. The first trade that you could possibly be looking for is the breaking of this symmetrical triangle that we've been within for the last roughly almost 3 weeks now. Okay, we've put in 2 top resistance and double bottom support. Okay, and what you can see here, or 2 touches on support, not a double bottom. And so considering the fact that we do now have the symmetrical triangle, it makes it easy. If we break out the symmetrical triangle, likelihood is we're going to revisit the top side of this wedge. Okay, so there could be the possibility of some type of growth of up to 17 to 20%, dependent of course on how long it takes us to visit the top side. So there is a trade there. Now, another thing that I observed on this way up is that the 618 to 786 Fibonacci levels are also a good indicator of when we could see another move to the upside if you are looking to trade. What you're going to do is every time we touch the top and we set in a low, draw your Fibonacci's from that swing high to that swing low. Okay, so what we're going to do, draw Fibonacci from that swing high to that swing low. And what you can see is that the moment we clear that 786 level and get a close above it, generally speaking, we revisit the top or at least get a strong move to the top side, right? Right here, we got rejected off of it, and as we got pushed back down. So you would not have entered right here because we never got the close above it. But the moment we started to push above it here and get these movements above that 786 level, boom, we saw a nice little push, which did equal, roughly 20% in gains. Now, similarly, we can see here that if we look at our most recent swing high to swing low move, from swing high boom, to swing low. At no given point have we been able to close above this level, so one could say that if history is going to create a similar pattern, once we start to close above this level, we very possibly could push up to the top side of this wedge here, which would also look like us breaking out of that symmetrical triangle that we talked about earlier. Okay, so right now, if I was going to trade, I would be looking for a close over $45. If it closes over $45 on the daily charts, then there could be a nice little trade to make up towards, $53 to $54. But do understand that, again, more often often than not, we will see this thing push to the downside out of an ascending wedge off of a macro downtrend. And there is at all times that risk that you will see that loss there and, you know, a bad trade. Okay, so that is something to be aware of, and it is something that you need to pay very close attention to, because there is no guarantee that, again, this will, you know, start to work its way out of this ascending wedge. So, looking at some of the indicators to support that, all of our indicators on the dailies look pretty healthy. I would say that we did actually already get a bit of a breakout on the daily RSI, which kind of, you know, it could very possibly be an early indicator, at least, that we are going to get a breakout of some nature from this resistance here. So there could be that trade coming soon here. Of course, looking at the daily MACD, we are looking to get a bullish cross soon here. But of course, we are in a bit of an intertwining phase where we are kind of bull cross, bear cross, bull cross, etc. So you get the point, right? So I wouldn't really put too much credit into this bull cross if it does happen, because looking at the hourly charts, we can see that on the hourly RSI, we are a bit overextended, and we are already actually putting in some bearish divergence, in which we are putting in the highs and the higher highs and the highs and the lower highs. This is about an equivalent high, okay? So that's about this is called exaggerated divergence. When you put in an equivalent high here with a higher high here, so exaggerated bearish divergence. And so that is something that I would pay attention to, because we could at least see a bit of a pullback first before continuing into that uptrend. Okay, so for that reason, the shorter time frames do seem as if a little pullback could happen as things are getting a bit overextended. So do just pay attention to that. But in the more long term, again, I am still waiting for what happens here. Do we break out of this wedge, and do we start to work our way to establish support and continue upwards? If we get this breakout here, of course, that would be the point in time in which I would be looking to accumulate more, because from there I am looking for those 100, you know, maybe 75% to 100% in gains as we do start to push back up to some of these higher levels. But until we get this breakout here, I am not confident that we're not going to see this happen. And so I'm not doing any major accumulation while we are in a pattern that more often than not breaks out to the downside. Now, many of you have been a little bit curious of, you know, should we even be buying Solana? Is Solana a crypto that we need to be wary of, especially after the hack on Friday, I believe, or Thursday, one of those days? Now, I want to kind of emphasize this a little bit. So Solana has its problems, and it's something we all know. Okay, Solana is one of those cryptocurrencies that they just took off a head start running, and they said, we'll figure out the problems as we go about it. Now, you know, you kind of have Solana and you have ADA. ADA Cardano is slow and steady, but we're probably going to miss a lot. Solana is, we're not going to miss anything, but we're going to have a lot of problems as we take advantage of all the hype, okay? And I will say that Solana has kind of underperformed as a blockchain in comparison to many other ones. That is a fact. But what we saw on Thursday or Friday, again, I don't remember the exact date, wasn't something that I would put and instill full blame into Solana for. So after an investigation, this is according to the Solana Foundation, so of course take this as you will, but it says here that after an investigation, the Solana Foundation said the affected addresses were at one point created, imported, or used in Slope mobile wallet applications. Private key information was inadvertently leaked from Slope to an application monitoring service. Though the exact cause of the leak is still unknown, regardless, a private key allows the holder to authorize crypto transactions from the associated wallet. Once the hacker had that information, stealing the funds was easy. In short, the entirety of the blame seems to be with Slope, and the Solana Foundation has noted there is no evidence that Solana itself was compromised. Personally, I've never used Slope, and my Solana wallets were fine, so I can somewhat say that it seems as there is legitimacy in my own small little bubble here. Okay, so overall, I don't believe this to be the full fault of Solana, and so for that reason, I wouldn't really be going say, well, I need to sell all my Solana and things of this nature, because although they have underperformed and though they have their problems, I wouldn't say that they aren't safe because of what we saw last week, right? So take that as you will, of course, but I wanted to just update you all and let you know that I'm not too concerned with what happened in terms of Solana, the token itself. So with that said, that's about it for today's update. Of course, I hope you guys did enjoy. If you like these quick, simple, and straight to the point updates, you can always let me know simply by smashing that like button so more people see the videos, and subscribing to the channel if you do want to see more videos yourself. But with that said, that's about it. Of course, I hope you guys did enjoy again, and I will see you all next time. Peace.